This video is a review of Honda's fiscal year 2026 first quarter financial results, covering the period from April to June 2025. Honda Motor is a Japanese multinational corporation primarily known for manufacturing automobiles, motorcycles, and power equipment. In particular, Honda holds a strong position as the world's #1 motorcycle manufacturer. Summary. In the first quarter, Honda recorded an operating profit of 244.1 billion yen. In the motorcycle business, sales grew in markets such as Brazil and Vietnam, resulting in the highest ever quarterly operating profit for this segment. In the automobile business, although Honda recorded tariff-related costs and one-time expenses associated with electric vehicles, sales in North America remained strong and supported overall performance. For the full fiscal year 2026, Honda has revised its consolidated earnings forecast. Operating profit is now expected to reach 700 billion yen, while net profit has been revised upward to 420 billion yen. This revision reflects a 200 billion yen increase in profit compared to the previous forecast, mainly due to a reassessment of tariff impacts and changes in foreign exchange rate assumptions. The estimated gross tariff impact has been updated to 450 billion yen following a detailed review. Additionally, the assumed exchange rate against the US dollar has been adjusted from 135 yen to 140 yen, in line with recent trends. While uncertainties such as potential policy changes around tariffs remain, the company aims to further grow profits by improving its earnings structure. Regarding the share buyback plan, totaling 1.1 trillion yen that was resolved on December 23, 2024, Honda had already acquired shares equivalent to 936.5 billion yen as of July 31, 2025. Consolidated financial results. For the first quarter, sales revenue decreased slightly to 5,340 billion yen, while operating profit dropped sharply by 49.6% to 244.1 billion yen. Quarterly net profit also fell by 50.2% to 196.6 billion yen. While revenue saw only a slight decline, profit decreased significantly. The progress rate against the revised net profit forecast is 46.8%, but the annual net profit is still expected to decrease by 50% compared to the previous year. It's similar to Toyota's situation. Although it has improved from the initial forecast, there is still a significant profit decline compared to last year. Consolidated financial forecast for fiscal year 2026. Honda has revised its full-year financial forecast upward. Operating profit is forecast at 700 billion yen, increased by 200 billion yen from the previous estimate, driven by better sales volume. Net profit has been revised upward by 170 billion yen, totaling 420 billion yen. Honda also updated its assumed exchange rate to 140 yen per US dollar from the previous 135 yen. These adjustments reflect the company's optimism about maintaining momentum throughout the rest of the fiscal year, partly because the outlook on US tariffs has become clearer, leading to a somewhat improved forecast. Shareholder returns. Honda plans to pay an annual dividend of 70 yen per share for fiscal year 2026, which is an increase from 68 yen per share in the previous year. In addition, Honda has decided to conduct a share buyback program with an upper limit of 1.1 trillion yen. These actions reflect Honda's commitment to enhancing shareholder value through both stable dividends and flexible capital allocation, aligned with earnings growth and financial conditions. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 1,606 yen as of August 8th, and the US dollar stock price is $31.46 as of August 7th. Honda made a significant upward revision, and its stock price rose following the earnings announcement. Current PBR is 0.54 and PER is 15.3. Dividend yield is 4.36%. This year's EPS is forecasted to decline significantly, making the PR relatively high compared to the past. However, the PBR and dividend yield remain roughly the same as historical levels. Conclusion: Honda's first quarter results showed a significant drop in operating and net profits, mainly due to U.S. tariff costs. Despite these challenges, the motorcycle segment achieved record quarterly profits, and strong automobile sales in North America supported overall performance. Honda revised its full-year forecast upward, reflecting improved tariff impact assessments and favorable currency exchange rates, signaling confidence in sustained growth. Honda also reinforced its commitment to shareholders by increasing dividends and continuing a substantial share buyback program.